So we know that the restructuring was going to kick off at least the expectation of a wave of new share sales.
Yeah, I mean, this is essentially what it looks like, the beginning of a possible wave of new share sales, because here in Hong Kong in these tech IPOs, it's been a real barren landscape for them over the last couple of years, obviously because of the regulatory crackdown and also stricter listing requirements, data security reviews and the like. You know, in the first couple of months of this year, IPOs from China essentially down about 48% from a year ago levels, and last year was down 69% from the year ago level in 2021. So obviously the Hong Kong Stock Exchange looking at this with welcome news. And I see this restructuring of Alibaba that we announced earlier this week, or Alibaba announced, we reported, as essentially a proxy approval or blessing from Beijing to, begin these IPOs and these listings again. And what we're hearing from sources is that of those 6 divisions that are going to be spun off essentially from Alibaba Group, Cainiao Logistics is going to likely be the first. Of all the 6, it's probably the one that is most ready to stand alone. It's the logistics arm, package delivery and the like. It has 15 delivery centers around the world and, of course, all across China. So we don't know how much they plan to raise, but it could be by the end of this year, depending on market conditions. The other side of this story is chief rival JD.com has indeed already applied to the Hong Kong Stock Exchange to list 2 of its units, Jindong Property and Jindong Industrials. Again, we don't know the size of these listings, but what we did see from that filing to the Hong Kong Stock Exchange is that JD.com, the parent, would likely maintain at least a 50% controlling stake in those 2 divisions. So welcome news for those who have been trying to get into the IPO train on board, and obviously good news for the Hong Kong Stock Exchange.